$98 trillion of wealth globally. Ultra high net worth individuals only represent 1% of the population, but they retain 35% of that total wealth.
Hello and welcome to The Big Question, the series from Euronews where we dive deep into the world of business and finance. I'm Stefan Groben and today I'm joined by Gareth Wilson, Executive Vice President at Capgemini. Thanks for coming on. Great to have you here.
Thank you, Stefan. Great to be with you for today's big question.
Now, Gareth, let's dive straight in. Capgemini recently published their World Wealth Report, looking at wealth distribution, millionaire populations, and the behaviors of high net worth individuals. So, tell us what's in the report. What are the most important takeaways?
Well, Stefan, this is actually the 30th edition of our Capgemini World Wealth Report, and probably one of the key takeaways is that absolute wealth and the number of individuals who retain that wealth continues to grow. I think we estimate that there's something like $98 trillion of wealth globally, and that's held by something like 25 million individuals. But when we look at year 2025 versus 2024, we've seen that population grow at the fastest rate over 5 years. So key messages are absolute wealth is growing, the number of high net worth individuals is growing, and actually we see that trend globally.
Can you just quantify for us what makes a high net worth individual?
So we define a high net worth individual, Stefan, as an individual who has investable assets of greater than $1 million, excluding their home. There are categories within that. So if you've got between $1 and $5 million, we describe you as a millionaire next door. Between $5 and $30 million, we describe you as a mid-tier millionaire. And if you've got investable assets of greater than $30 million, you're an ultra high net worth individual. This is very much the kind of apex of the pyramid, as it were, Stefan. And those ultra high net worth individuals only represent something like 1% of the population, but they retain something like 35% of that total wealth.
That is an amazing number. And what about these ultra high net worth individuals? Are they getting richer?
They certainly are. We've seen some continued growth in terms of their absolute wealth. I think at a global level, we've seen growth of something like 9% in 2025 versus 2024. We've also seen a little bit of a shift in terms of some of the elements of that wealth, Stefan. We've seen a move towards equities, so stocks and shares. We've seen a move towards fixed income assets. And we've seen probably a reduction in terms of the cash holdings. And that's an interesting point because I think we view cash as a relatively conservative asset class. And we've seen these high net worth individuals move their investments to higher returns, but also potentially higher risk. Equities, stocks and shares.
So they're now more millionaires and they're getting richer. What does that mean for the rest of us?
Well, I think, our focus has very much been on that high net worth individual population. And I think because of their assets and their appetite for investment, this should generate growth. This should generate economic value across the globe. I think we see that in terms of how some of the stock markets have responded. That period, 25 versus 24, we saw significant growth across many markets, and that's generating the wealth, but it's also generating the opportunity for reinvestment. And I think this investment should benefit the global economy, and this high net worth individuals represent a very significant element in that opportunity.
I assume that this wealth isn't evenly spread across the world. Tell us about the geographic regions that have seen a boom, for instance.
In the context of the overall trend being positive, I think the US, we've seen very material growth. I think the US has something now like 8.7 million high net worth individuals, and that's grown at something like 9%. When we look at here in Europe, the total number of high net worth individuals is circa 6 million. and we have something that's seen growth in the region of 6%. So we've seen a little bit of a difference between the US and Europe. The one exception this year was the Middle East. We saw a decline in terms of high net worth individual growth of negative 2%. And Stefan, for me, when we look at that in detail, that's probably more related to the oil price reduction in the Middle East. But the US has grown very significantly. We have seen growth in Europe, and Asia Pacific continues to be positive.
Is there a particular reason why the US is growing and why Americans are accumulating more wealth?
I suppose there's a number of factors here, Stefan. I think, scale would be one. The absolute population, as I say, there's 8.7 million high net worth individuals in the US. Their population is something like 4 times as big as our largest country here in Europe. I think their financial markets and their financial system, incredibly mature and also quite attractive. So we've seen a number of companies list on the New York Stock Exchange and take advantage of the kind of financial markets in the US. I think SpaceX probably being one of the most recent examples on that basis. We've also seen tech innovation. Silicon Valley, the West Coast, I think for a number of years now has been recognized as a hub, a hotbed for innovation, a hotbed for technology advancement, technology investment. And in the current environment with AI being a very hot topic, Stefan, that continues to create a very conducive environment for investors and therefore a positive environment for these high net worth individuals, to continue to prosper.
Any hotspots in Europe?
Now, we are here in Brussels, and I think, when we look at Belgium as a country, I think their high net worth individual growth was something like 9% last year, which is good. Germany, where you're from, Stefan, actually even more positive at double digit. I think Germany grew somewhere in the region of 11% in our Capgemini World Wealth Report.
This data, what does that tell you about the conditions in Europe?
The environment in terms of what the European Central Bank has done with regard to interest rates has definitely created some more stability to enable investment. But we've also seen significant focus on innovation, whether it be sectors like defense, which is obviously for differing reasons, Stefan, has seen a kind of a significant increase in demand because of some of the geopolitical challenges that we've seen and some of the wars we've seen around the world. But that is also generating growth within the local economies. It's generating equity performance and ultimately contributing to this growth within the high net worth individuals.
All right, Gareth Wilson, Executive Vice President at Capgemini. Thank you for breaking it all down for us.
Thank you, Stefan.